Hi everyone. Welcome to this exciting journey into the world of candlestick charts. We'll explore how to use these powerful tools to analyze market trends and recognize trading opportunities. By the end of this course, you'll have a solid understanding of candlestick patterns and how they help predict market movements. Let's dive in. Let's start with doji patterns. Doji patterns are fascinating because they reflect market indecision. Imagine a tug-of-war where neither side wins. That's what a doji looks like. What is a doji? It's a candlestick where the opening and closing prices are almost the same. This tells us that neither buyers nor sellers had the upper hand during that time. Types of doji. Neutral doji, a simple cross shape signaling pure indecision. Long-legged doji. With longer wicks, it shows intense battle between buyers and sellers. Dragonfly doji appears like AT, signaling potential bullish reversal. Gravestone doji, shaped like an upside-down T, hinting at a bearish reversal. Where does it help? Doji patterns often signal that a trend might reverse or pause. But remember, context is key. Look at the trend before and after the doji to understand its significance. Next, we have the hammer candlestick. This is one of my personal favorites because it's easy to spot and so powerful in practice. What does a hammer look like? It's a small body with a long lower wick, like a hammer. It usually shows up at the bottom of a downtrend. What does it mean? The long lower wick tells us that sellers pushed the price down during the session, but buyers came back strong, forcing the close near the opening price. It's a classic sign of a potential bullish reversal. Pro tip: look for confirmation in the next candle. If it's a green candle closing higher, the hammer's bullish signal is stronger. Now let's talk about the hanging man. It looks similar to a hammer, but it tells a very different story. What is a hanging man? It appears at the top of an uptrend and has a small body with a long lower wick. What's the message? Here's what's happening. During the session, sellers pushed the price down, but buyers managed to recover. However, the fact that sellers had such strength is a warning sign that the uptrend might be losing steam. Actionable insight: wait for the next candle. If it's red and closes below the hanging man, it confirms the bearish reversal. Have you ever seen a shooting star? It's beautiful in the sky, but in trading, it's a warning. What is a shooting star? It's a small-bodied candlestick with a long upper wick and little to no lower wick, appearing at the top of an uptrend. What's happening here? Buyers tried to push the price higher, but sellers fought back hard, pulling the price down by the close. This pattern often signals a bearish reversal. Remember, just like with the hanging man, look for confirmation in the next candle to act confidently. Next, let's explore the Marubozu candlesticks. These are the bold statements of the market. What is a Marubozu? These are candlesticks with no wicks at all. The open and close are the extremes of the session. Types of Marubozu. Bullish Marubozu. The session opens at the lowest price and closes at the highest. This screams strong buying pressure. Bearish Marubozu. The session opens at the highest price and closes at the lowest. This shows strong selling pressure. Why are they important? Marubozu patterns signal clear dominance by buyers or sellers. They're often the beginning of a strong trend. Let's spin things around with the spinning top. What is it? It's a candlestick with a small body and long wicks on both sides. This pattern represents indecision, just like a doji, but with more action during the session. Why does it matter? When you see a spinning top in an uptrend or downtrend, it might indicate that the trend is weakening. Watch closely for the next candles to confirm the direction. Now we're moving to the engulfing patterns. These are pretty dramatic. What is an engulfing pattern? It's when one candlestick completely engulfs the previous one, signaling a change in momentum. Types: bullish engulfing. A green candle engulfs the prior red one, signaling a potential bullish reversal. Bearish engulfing. A red candle engulfs the prior green one, signaling a bearish reversal. Real-world tip: these patterns work best when they appear after a clear trend. Use them alongside other indicators for higher confidence. Let's talk about two patterns that are mirror images of each other: the piercing pattern and dark cloud cover. Piercing pattern appears during a downtrend and signals a potential bullish reversal. The first candle is bearish, but the second candle opens lower and closes above the midpoint of the first candle. What does it tell us? Buyers are stepping in strongly after a bearish session. Dark cloud cover, opposite of the piercing pattern, appears in an uptrend and signals a bearish reversal. The first candle is bullish, but the second candle opens higher and closes below the midpoint of the first candle. Message: sellers are gaining strength after an uptrend. Key takeaway: always wait for confirmation with the next candle. Now, let's look at the morning star and evening star, two powerful three-candle patterns. Morning star appears after a downtrend and indicates a bullish reversal, composed of a long bearish candle, a small-bodied candle gap down, a long bullish candle closing above the midpoint of the first candle. What it means: buyers are taking over after sustained selling. Evening star, opposite of the morning star, appears after an uptrend, signaling a bearish reversal, composed of a long bullish candle, a small-bodied candle gap up, a long bearish candle closing below the midpoint of the first candle. Message: sellers are taking control after a rally. Real-world example: look for these patterns near significant support or resistance levels. Three white soldiers appears after a downtrend, signaling a strong bullish reversal, composed of three consecutive long bullish candles, each closing near its high. Message: buyers are firmly in control. Three black crows appears after an uptrend, signaling a strong bearish reversal, composed of three consecutive long bearish candles, each closing near its low. Message: sellers are dominating. Pro tip: be cautious if these patterns appear with overbought or oversold indicators. Let's discuss the bullish and bearish harami patterns. Bullish harami appears during a downtrend. A small green candle is completely inside the body of a larger red candle. Message: sellers are losing momentum and buyers might take over. Bearish harami, opposite of bullish harami, appears during an uptrend. A small red candle is completely inside the body of a larger green candle. Message: buyers are losing steam and sellers may take control. Fun fact: the term harami comes from Japanese and means pregnant, symbolizing the smaller candle within the larger one. Kicker patterns are rare but super powerful. Bullish kicker, a sudden shift from bearish to bullish momentum. A large bullish candle forms after a bearish candle with a gap up. Message: buyers have taken complete control, often triggered by news or events. Bearish kicker, opposite of bullish kicker. A large bearish candle forms after a bullish candle with a gap down. Message: sellers are firmly in charge. Pro tip: kicker patterns often lead to sharp, sustained trends. Let's move to abandoned baby patterns, a three-candle reversal pattern. Bullish abandoned baby appears at the end of a downtrend, composed of a bearish candle, a doji with a gap down, a bullish candle with a gap up. Message: a strong bullish reversal. Bearish abandoned baby, opposite of bullish abandoned baby, appears at the end of an uptrend, composed of a bullish candle, a doji with a gap up, a bearish candle with a gap down. Message: a strong bearish reversal. Important tip: these patterns are rare but very reliable. Finally, let's talk about continuation patterns, the rising and falling three methods. Rising three methods appears during an uptrend, confirming its continuation, composed of a long bullish candle, three small bearish candles within the first candle's range, a long bullish candle closing above the first. Message: the uptrend is healthy and likely to continue. Falling three methods, opposite of rising three methods, appears during a downtrend, composed of a long bearish candle, three small bullish candles within the first candle's range, a long bearish candle closing below the first. Message: the downtrend remains intact. Let's look at the separating lines patterns, great for trend continuation. Bullish separating lines appears in an uptrend. The first candle is bearish, but the second is a bullish candle opening at the same level as the previous close and closing higher. Message: the uptrend continues with strong bullish momentum. Bearish separating lines. Appears in a downtrend. The first candle is bullish, but the second is a bearish candle opening at the same level as the previous close and closing lower. Message: the downtrend remains intact. Pro tip: look for these near key trend lines or support/resistance levels for better confirmation. The inverted hammer patterns add to your reversal toolkit. Bullish inverted hammer. Appears at the end of a downtrend. A small body with a long upper wick indicates buyers are gaining control after sellers dominated early in the session. Bearish shooting star. Similar shape but appears in an uptrend. Suggests that the buying pressure is weakening and a bearish reversal might follow. Real-world use. Combine these with volume analysis to boost confidence in your trades. Let's recap the key candlestick patterns we've covered. Reversal patterns. Doji, hammer, hanging man, shooting star, morning/evening stars, engulfing, abandoned baby. Continuation patterns. Maribozu, rising/falling, three methods, separating lines. These patterns tell stories about market psychology. Mastering them helps you spot opportunities and manage risks effectively. Candlestick patterns provide powerful insights, but context and confirmation are crucial. Combine patterns with indicators like volume, RSI, or MACD for better results. Practice with historical data before applying live. Closing thought. Candlestick patterns are tools, not guarantees. Use them wisely, and they'll help you stay ahead in the markets. Good luck with your trading journey.